In this video I'm going to be showing you how I go about finding my trading opportunities. So how I go about finding opportunities to long the market, to short the market, and it's really quite simple actually. So you might see a lot of traders using like a million different indicators. They've got so many lines and flashy things going on the chart and you don't know what's going on, right? It's too complicated to follow. It really doesn't have to be that difficult. All of these fancy indicators and stuff, they're mainly just useful for if you're a short-term trader, if you're a scalper for example, if you're just opening trades for a few minutes at a time and you need to make fast decisions. These indicators are more useful for that type of trading. It's so they can make faster decisions. They can look at the indicators and then they can just make a decision based on the indicators because they haven't got time to like do loads of analysis, right? But if you're swing trading, like that's what I mainly do is swing trading. You know, I'll hold for hours or days or even weeks, right? So there's plenty of time to look at the chart and analyse what's going on. You're not in a rush to make a decision, so you don't need all these fancy indicators. Even though some of them might be useful sometimes, and they can still help here and there, you can use them a little bit, especially if kind of trading for a little bit, you can kind of decide like maybe there's an indicator that you like, then maybe you can use it, right? But you don't need a million different indicators. It's not necessary for longer term trading. All you really need to understand to begin with is price structure, okay? So you've got two different types of structures, right? Or market conditions. So you've got trending, so where something's going up and then down and printing a higher low, and then a higher high, then a higher low, higher high, higher low, higher high, higher low, higher high, higher low. That's a trending market, right? And the same in the opposite direction as well. You know, if it's going down and it's in a bear market, it's going to be printing a lower low, lower high, and so on. So that's trending market conditions. And then you've got ranging, right, where it's going up and down and up and down and up and down in a range, okay? So the lows are pretty consistent and the highs are pretty consistent. It's ranging. So those are the two types of market conditions. And then you also have chop, where the price is just kind of going up and then up and then down. You know, it's not consistent. You can't really see what's going on. It's much harder to trade that, right? So these are the two main market conditions, but then also you've got chop as well, right? So three market conditions, I guess. So when something's chopping, you don't really know what's going on until it starts ranging or it starts trending, right? So you want to kind of take a step back a lot of the time when it's like this, and you want to wait until you can see a clear trend or you can see a clear range. You don't really want to try and trade this, right? So if you see chop, most of the time you want to be staying away from that. And when something's trending or ranging, basically when it breaks out the range or it breaks out the trend, then you can see a reversal, or you can see, you know, a change in trend, a break of structure, or whatever you want to call it. So if it's trending up like this and then it comes down here and it takes out this low here and it goes beneath it, it holds beneath it, and then comes back up maybe and bounces off it and comes back down again. That's a change of character there, right? So it was going up in a trend and now it's changed. It's changed character, it's reversing. Even though this won't 100% of the time equal a reversal, but this will at least reverse momentarily, you know, even if it's going to go back up into the trend afterwards. It could be a fake out. It doesn't always work out the way you plan, obviously. It's impossible to predict things perfectly. Otherwise you could just be like a trillionaire from doing this, right? It's unrealistic. But generally that's what happens, right? If something's trending and then the trend breaks, then that usually results in a reversal, at least temporarily. And the same as if something's trending, you know, if it breaks beneath the range, I mean, if something's ranging and then it breaks beneath the range or above the range, then a lot of the times it will continue, even though sometimes it will fake out and then it will come back in, right? Sometimes it will do that. Sometimes it will just take out liquidity that's beneath the range or above the range, because you've got people's stop losses above the range or beneath the range. And the same with the trend, right? You've got stop losses outside of the trend. So sometimes price will just go into those areas and it will take out the liquidity that's sitting there, aka the stop losses or limit orders. It will grab that and it will liquidate people as well, and then it will come back in the range or inside the trend again. So sometimes you see that, but oftentimes it does result in a continuation as well, right? So sometimes you get fake outs, sometimes you get continuations. So you have to keep both of those things in mind. So now that I've got that out of the way, what you want to do, or what I do, is I get the all-time chart. So whatever time frame that I can see the all-time chart on, it will depend on the asset you're looking at. You know, for some assets that have been out for less time, you can use a shorter time frame to see the all-time chart. But you just need to be able to see the all-time chart, right, since it came out. And all you need to do is identify support and resistance areas, okay? So clearly there's one here, right? This is a big all-time high back here. This was a big low down here, but this was a big sell-off here. It was a big dump here, and then it bounced back up, right? So there was a lot of momentum here. So that's probably not going to be that much of a support. I mean, it would be a support if it goes down there, but it's not as relevant because it's probably not going to happen again. Or I guess never say never, but A more important area is where it's touched more often, right? So as we can see here, it touched here, and it touched here, and it also kind of did it here. So it's touched this kind of area a few times, which lines up with this high back here. So it's touched 1, 2, 3, 4. It's touched this area a lot of times. Okay, so basically I'm going to draw a box there on that support zone. So I'm going to zoom in here. So this is the all-time high. I'm going to poke it just above the candle closes, and then I'm going to drag it over here, right, all the way to in the future, and I'm going to kind of move it a little bit so that it's just where the wicks came down and bounced, where it's bounced a few times, right, where the bottoms have come and it's bounced off of those areas. So we know because it's bounced here a few times, that's a strong area of support, right, because it's reacted there quite a few times. And now we're going to do the same thing for the tops. Okay, so now we've got some pretty major support and resistance zones right there, right? But you've got the two major ones are cleared out right there. Those are the two major support resistance lines. Those are the two major support and resistance areas. So now I'm going to zoom into the lower time chart. So now we're zoomed into the daily time frame, and now we can start looking for some support and resistance areas on this time frame. Okay, so we can see here it reacted here, it reacted here, 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 here. It reacted loads of times around all of these places, right? So I'm going to kind of draw a box around all of these. So we'll just start here at this close, and we'll just kind of line them up as best as we can, right? So it's as many touches as we can. So that's the most likely rejection point, right? That's the biggest key area of interest, right? Is where it's reacted the most times is where it's likely to react again in the future. Okay, so that captures a lot of that, right? It captures this one, this one, this one, this one, this one. So like 5 times it's rejected off of there, and then there's probably one around here somewhere as well. So now we've got some more key areas highlighted on the daily chart. Okay, so now we're going to zoom into the 4-hour chart. So on the 4-hour chart, we're kind of coming up to the top of this key area of support or resistance, which is currently acting as resistance. We're at the top of this zone right now. Okay, so this might be a place where you want to short, but you want to wait for a reaction because it can break through here. So this is where you have to use a little bit of discretion, and this is where an indicator might be useful for you. You might want to use like maybe the RSI or a MACD to kind of give you a signal that you want to go into the trade. But I don't really use that because I just look at the candles, and when you're swing trading, again, when you're doing it on a longer term time frame, on the 4-hour or the 1 hour, or even the daily sometimes, you've got plenty of time to read the candlesticks. You don't need to put an indicator on there. So right now it's at resistance, but it's not showing strong sell pressure yet. And sometimes I do like to look at volume. So if you see volume kick in, then that obviously shows that there's a lot of activity going on there. Like if you see the volume kick in here and it's a big green volume candle, then maybe it's going to break out, right? It's going to go higher. So you wouldn't want to short it. But if you see some selling coming in, for example, if you see the price pushing above this area of resistance, and then you see some aggressive sell volume and it come back in the zone, then maybe you want to take a short there, right? Like maybe it goes a little bit above here, but then smack, it comes straight back in here. You get a red candle down here on the volume, and then you might want to short here back down into the lows down here, right? So then maybe you would put a short here, you put the stop loss above these highs. So these highs here, you might just put your stop loss above these, so that if it goes back above those again, then it invalidates the trade and you're out of the trade. And then you just target back down here. Don't be too greedy with it. Don't try to shoot all the way to the moon, or in this case all the way to hell. But a general rule that I follow is the risk to reward should at least be 1 to 1. Because if the risk to reward is 1 to 1, then you have to be right 50% of the time in order to be break even. So if you just do 1 to 1 every single time, then as long as you're right more than 50% of the time, then you'll be profitable. But if you do at least 1 to 1, and you just look at, right, where's a good zone to take profit and where's a good zone to put the stop loss, and then if it's less than 1 to 1, you don't take the trade, right? And if it's more than 1 to 1, then you can do it. And yeah, you just got to look at the places. So you're going to put it in a sensible place, right? You're going to put it not beneath here because it's unlikely to hit, or unless you really think it's going to go down there. But you might just put it just before the bottom here, like if you think it's going to come down, and yeah, you'd put it just in a sensible place, not being too greedy with it. And so long as it's more than a 1 to 1, then maybe it's worth taking the trade, right? So the stop loss is in a logical place, the take profit is in a logical place, and that's it. So the risk to reward on this is a 1.73 R. So that means you're risking 1 unit in order to gain the reward of 1.73 units. Okay, so you need to be right less than 50% of the time now. And even sometimes you'll get a risk to reward that's like 3 or 4 or something, or 2. 2 is pretty common. So you need to be right much less than 50% of the time in that case. And this is basically it. This is how you find opportunities for longs and shorts in the market. And when you're on the lower time frame, you might just throw some lines around. Like you might see this low up here, so you might put that on there thinking that could be resistance if it comes up to this again. Okay, it might bounce off of there, because that's a common thing you see. You might see a trend line somewhere, like here, it's kind of forming a trend line. And then you can kind of use that as a point of resistance as well. You might just spot certain things, right? You can even zoom into the 1 hour. And this is pretty much the shortest time frame you're going to be trading on if you're swing trading. If you're going lower than 1 hour, it leans more towards day trading and scalping even sometimes. Sometimes I'll look at it, but for the most part, the 1 hour is the lowest I go. And if you come down to the 1 hour, you can see it's bounced off of this resistance at the top multiple times, okay? So you might even just take the short down to there. If you see all of these points of resistance here, you might just enter when it gets up here, when it gets back up there. You might enter it, and you might put the stop loss just above the high here, and then you might just target just down to here, you know? You might not even target all the way down there. You might just do a nice small trade on the lower time frame, but it's still the same risk to reward. Like, it doesn't matter how much you zoom in, you're still risking the same amount to make the same amount. You're still risking, you know, it's still the same trade basically. It's just on a different time frame, but you're still risking the same amount to make the same amount, right? And then, you know, you can zoom into the 5 minute if you want. So on the 5 minute, if you zoom right in here, you might just see that it's bounced here and here, and it's bounced here, okay? So you might just put a line roughly where these all line up, right? See, you can see that was support there. Now it's come beneath here. So now when it comes back up to here again, you might take a short, and then you might put the stop loss just up here above this high up here or something, and then you might just target just down to here for a 2 to 1. And if we zoom back out now, so now this is back on the 4 hour chart, and that's the trade here. That's the short right there. See, it's tiny, but you're still risking the same amount to make the same amount. But again, I don't go that low on the time frame because it's much more time intensive, right? You need to be much more active looking at the charts, looking for these trades, monitoring them. You need a lot of time to be able to do that. I don't have the time for that, so I trade on the 4 hour, the daily, or sometimes I look at the 1 hour. I rarely look at the lower time frames. Sometimes I might, but not much. But yeah, in a nutshell, that's my leverage trading strategy, and it's really quite simple. I hope I made it quite clear, because I know a lot of these kind of videos on YouTube are pretty complicated, because I watched a lot of them in the past. But I think the way that I'm doing it is pretty simple, or I've managed to simplify it quite a lot. Maybe I'll make more videos like this in the future. I'm not used to making videos like this. It's kind of hard to make this video because I'm not used to making videos of this style, so it's kind of difficult to make. But if I make more videos like this, I'll get better at it. So yeah, hopefully this was simple to understand, and now you can go and use this to your advantage in some way. And hopefully you learned something. If you did learn something, please drop me a like. I'd appreciate that a lot. Subscribe to the channel to keep up to date with future videos. And if you really want to stay up to date with what I'm doing, go ahead and join my Discord. The link for this is down in the description below. And you can see all of my trading activity here, my watch list of altcoins I'm looking at, my meme coins, and the AI agents I've been searching for, etc, etc. Everything I'm doing in the market right now in crypto, you'll be able to keep up to date with all of that in here in the Discord. So again, the link for this is down below. Thanks for watching. See you in the next one.